This article provides a compelling and detailed account of the deep, systemic involvement of British financial institutions in the transatlantic slave trade. It argues that this was not a fringe activity, but a central, legal, and respectable industry, the profits from which were foundational to the modern British economy. Prominent figures and the nation's most revered institutions, including the monarchy, openly participated. The text uses the Royal African Company as a powerful starting point, illustrating the trade's brutal mechanics. Details such as branding enslaved people with the initials of the Duke of York and recording their deaths at sea as inventory losses reveal a system that thoroughly dehumanized its victims for profit. This enterprise was a precursor to a wider financial ecosystem. The article demonstrates how the Bank of England, though created to fund wars, became an indispensable enabler, providing the vast credit that merchants needed for expensive slave trading voyages. Its complicity was not just indirect. The bank at times directly owned enslaved people as collateral for defaulted loans. Similarly, the insurance market, centered at Lloyd's of London, normalized the trade by valuing human beings as cargo. The horrific case of the Zong, where a legal battle was fought over an insurance claim for 132 Africans thrown overboard, starkly illustrates how financial mechanisms superseded any consideration of human life. The article exposes a profound hypocrisy at the heart of the British establishment, noting that the philosopher of liberty, John Locke, was a shareholder in the Royal African Company while drafting his treatises against enslavement. His involvement, alongside that of members of Parliament and other elites, shows how widely the institution was accepted and how its profits permeated society. Perhaps the most damning revelation is the enduring financial legacy created by abolition. When slavery was abolished in 1833, the enslaved received nothing. Instead, the British government compensated the slave owners for their lost property with an enormous sum, £20 million, or 40% of the government's annual budget. This debt was so large that British taxpayers only finished paying it off in 2015. This compensation was not simply spent, but reinvested, funding railways, canals, and the early capital of major modern banks like HSBC, Barclays, and the Royal Bank of Scotland. In essence, the article argues that British finance was inextricably built upon the profits of the slave trade. The wealth it generated was not a historical footnote, but was compounded through compensation and reinvestment, creating enduring economic structures and aristocratic dynasties that persist today. The recent apologies from the Bank of England and Lloyd's of London signal a contemporary reckoning with this dark and foundational chapter of financial history.